All right, everybody. This is KD for the Wealth Wells coming at you tonight with a quick training on confirmation, right? What tells me to get into a trade? What am I looking at? And how do you look for confirmation in a bear market? What is it that's going to help you guys when SPY is being very weird and disjointed? What's going to take your trading to the next level? I thought we'd take a moment and talk about this in 15 minutes or less and kind of get you up to speed, give you an edge to trade more effectively. All right. So if you're hearing me, give me a thumbs up in the SPY only options room. If you can hear me, give me a thumbs up in the SPY only options room. All right. Excellent. Excellent. Everyone's there. Okay. Very nice. For those of you guys who are brand new, this Discord is unlike any other. We are a group of effective traders. I train folks every single day on how to effectively day trade SPY. When I post this video, you can click the link down below. When you come into this Discord and you click the link there, make sure you verify yourself and then hit the rules, right? Read the rules, but click the testimonials tab. I can't make this stuff up. This is folks just like you and I who've been trading in the market and have literally had their eyes open on how to effectively trade every single day. And so I encourage you to spend some time in here in this channel here. Then come over to one-on-one bookings, sign up for training, and get the training that you need. This training that I'm going to give you right now is going to be a short one. We're going to just talk about 3 ways to read, 3 ways to get confirmation to enter a trade. All right. How do you know what to do, when to do it, and how do you know, when to hold, all that cool stuff. Now, I'll tell you this training right now, all right, will dovetail very nicely with our video trainings here, and you can watch this training right here. Look on YouTube, look inside of any kind of any one of my video descriptions, and you'll be able to read the description and get this access to this training right here. Use this 3-step strategy to effectively day trade options and get 100% wins consistently. All right. So this training that we're going to do, it ties in nicely with what my standard 3-step system that I'm using to get confirmation. We're going to talk about an additional steps. We're going to talk about additional things that we need in order to day trade effectively. All right. So looking at SPY today, you got a couple levels on your screen here. We can clearly see the market structure. But if you traded today, then you know the market was very low volume, as you can see at the bottom. Last 3 minutes of the day, we got some nice volume and barely hit 385, right? The opening period, we did get a dump and a pump there. And then for the better part of the day, we ranged anywhere underneath 385, but 384.7 area, really down to 3837 area. So about $1 range, maybe $1.50 at max, about $1 range from 11 o'clock on. So if you are just, trading SPY for the first time, then you may not know, but this is abnormal behavior for SPY, right? You may just be thinking that this is the way the market is. Now, folks that traded today also was expecting probably a little more volatility, maybe because of OPEX and some other things happening in the market. We'll take questions after about that. But the reality is this behavior can shake a lot of traders out. You see these big, long, nasty wicks right there? See that? That's going to shake folks out a lot of times. And I'm going to tell you right now, this isn't going anywhere. It's not going anywhere anytime soon, okay? So what we have to do is understand how to effectively trade it. That's what we got to understand. How do you effectively trade this stuff so that you're not caught in a trade going the wrong way, or you're not faked out and you can get max profits. So to do that, let's talk about the confirmation that you're going to need. 3 ways to read confirmations to enter a trade. Now, the first thing you're going to want to do when you're looking to gain confirmation to get into a trade, the first thing you're going to want to do all right, is you're going to want to identify retracement areas while you trade during the day. Now, let's be clear. You can call them whatever you want, folks. All right. There's just a slew of videos about support and resistance, supply and demand zones. Listen, I've been pretty vocal about this in some of my videos, and I'll continue to be vocal about it. You can call it whatever you want. At the end of the day, it's just a price level, folks. It's just a price level. Now, the reason why folks snap zones is because they don't know exactly where it's going to react to. But let me help you with something. Wall Street isn't trading based on a zone. They are not buying. They're not going to buy. They're not going to sell unless this sucker hits a price, which is why today, in the last minute or two, we rocket to exactly 385 area. That's how it works. All right. That's exactly how it works. So you can call them, folks, whatever you want. You can call them whatever you want. But the reality is, as you trade throughout the day, identify retracement areas. Okay. Areas of support, resistance, supply, demand, what have you. Now, I don't like to use the phrase supply and demand loosely because it suggests that there's an overwhelming amount of supply and that a sell-off will happen, or that there's an overwhelming amount of demand for the stock and an aggressive buy-up will happen. So you got to be careful with that, right? Every time a stock moves up and down does not mean it's at a supply and demand zone. Now, this is not a training on supply and demand. Maybe I'll do one about that, do one on that later, right? But I'm just helping you with some things, okay? Support and resistance, that may be a little bit better for me to digest and for you as well. Either way, you need to be looking for those areas. So let's plot a few on our chart right now together, looking at the day, all right? The day opens up and it rejects around 383.18. Now, this isn't all of my key levels. This is just a training. For those of you guys who are inside of the killer whales, that's tier 3 access here, then you guys know every day I post my proprietary levels that I've charted. And you can come in this tier 3 access, clicking the link down below inside the Discord, or you can come into the Discord and hit the one-on-one bookings tab and get into the killer whales, and you'll have access to the levels. But I've cleared my chart just to give you a little idea of what's going on, okay? Now, we reject somewhere around 383.16, and then we run up. We get a wicked candle at 10 o'clock, some market moving news, right? Consumer sentiment or what have you comes out. We get a wicked looking candle there. Now, after that, we begin to retest 382.01 for a moment. We chip around and then we begin to move up. Now, as the day opens up immediately, if you don't have a level here, you should be looking and asking yourself, is this a retracement area? Supply, demand, support, resistance, what is it? And go ahead and mark it on your screen. So what I like to do for a visual is just right here. I'm going to put a nice little square rectangle there. I see why. Because primarily there are three things that's happening that govern my trading. All right. There are only three things that you need to effectively day trade. Can somebody in the Discord tell me what are the only three indicators you need to effectively day trade? All right. I see some folks saying it. Yes, all day long. You guys can see it. VVP, all day long. VVP, that's what you need. All right. You need three things to effectively day trade. Here they are. VVP, volume, volatility, and price action. Volume, volatility, and price action. Do yourself a favor. When you come into the Discord, or you can look on YouTube, look for this video. The only three indicators you'll ever need. Forget the rest, omit the rest, just go ahead and delete them. You'll be good with this. All right, you'll be good with it. Now, let's go back to the chart here. Okay, so here you have an area where you can clearly see we've retraced, and then we've had to break through resistance, as it were, right? Or we've had an area here where we have some price action. All right, there's those three things we need: volume, volatility, price action. We trade based on price action, the stock's reaction to the price and price levels. So this is telling us that there's some price action here. We just mark it on our screen. That's number one. All right. So now let's think this thing through. All right. we come up and we come up to the POC. I trade on a 3-minute. We come up to the POC and we get a rejection. Now, instead of taking the rejection, or if you missed a rejection, you have already charted, identified a potential inflection area, a potential rejection, a potential support, resistance, supply, demand, whatever you want to call it, pivot level. There's a million names for this stuff, all right? It's just a price level. But the reality is you've already identified this area or this zone. So what you should be looking for is on the retracement here, you should be looking for the stock to react to this level, and then you want to go to your first indicator. The first thing, all right? So we're talking about 3 ways to read confirmation to enter a trade. As you trade throughout the day, you want to identify retracement areas. So how about we do this? Before I go to my first one, let's identify the retracement areas. How about that? So right away, that's a retracement area. We had a rejection here, price action, a hold, all right? This retracement area, right? Double bottom, double bounce, action by a price level, we got a hold. This retracement area, we see the price action, retracement area. Notice how they're all around our price level. I just want to make that point. Then at the top side, rejection. The top side, rejection, right? Those are our levels of interest. And we're simply charting this as the day goes on. So for many of you guys, including myself, right, the day's going to look like that. It's going to look like as you go, it's going to be chipping and you don't see anything else. But the first level you're going to have is right there. And as this thing runs up to this point, you're going to stretch this level over. You're going to stretch this area over, right? And all you're doing is watching for that area. You can call it a zone, you can, whatever you want to call it. That's up to you, okay? All right. So now you are watching for price action as you trade. When you see the stock come into the area, then you move to your first indicator. And everyone knows, as I've trained you, in addition to your levels, in addition to all the cool stuff, you are reading candlesticks. Now, let me be clear. I've been asked a couple of times, and I want to comment on it because I have no problem with it, and I want to make it clear. There are things I do have passion and issue I take issue with. So lagging indicators, yes, I take issue with lagging indicators. I certainly do, right? I don't think that a trader should be using lagging indicators to make a trading decision. Personally, that's my opinion, okay? I don't think so because it's only going to make you late to the move. It's going to really cripple you and it's going to hurt you. It's going to hurt you. And what do I mean by lagging indicators? All right, it's no secret. This is what I mean. MACD, RSI, TTM squeeze, Bollinger Bands, EMA, SMA. Do they have a purpose? Can you use them in certain setups? The answer is absolutely yes. I'm not mad at them. But for a new trader and an experienced trader, for a trader looking to day trade, folks, I'm going to say it again, day trade, intraday. If you're looking to be effective, this stuff is going to hurt you. Here's why. Let me explain it and then we'll move on. 2 minutes. Here's why. Using lagging indicators ultimately is going to hurt you. Now, you may have a setup that you like. I've heard it. I've trained just in this Discord alone. I don't know the number of people I've trained, right? But it's in the hundreds just in the Discord. And I'm telling you, some folks have been trading 20, 30 years. Some folks have been trading 2-3 months. And they all have an experience of a lagging indicator of some sort. And guess what? They've all failed at some point in their trading journey. So if 99% of traders are failing, like this is a true statement. I'm not making this up, all right? If they're failing and they all use this kind of stuff, why do you want to use it that bad? Why not just use it for certain specific long-term, higher time frame setups and learn how to really read the market? All right, I'm going to get off my soapbox, but let me help you with this. All these indicators right there, they're based in part or in whole on just 3 things: volume, volatility, and price action. In fact, our favorite, most people's favorite lagging indicator, which I have no problems with, okay, is VWAP. Throughout the day, I may even refer you to VWAP, right? Well, what is VWAP? Isn't it a combination of two of the three indicators you need? Isn't it just a combination of volume and price on an average? Yes. So why not learn how to read volume and price action, and you won't be so dependent on VWAP. In fact, I'll challenge you. Once you come into the Discord, right? Click the link down below or anywhere, get it from your buddies, and you come into the Spy on the Options room, or you can do the Killer Whales access. Once you come in there and you start getting the proprietary levels and you start getting some training, you're going to learn that when the stock meets up with VWAP, nearly every time it is at a major or relevant price level. Every time there's a VWAP bounce or touch or rejection, it's happening at a price level. It's happening at an area of interest. So just throwing it out there. So the first thing is we've identified these retracement areas. You can call them supply and demand, support and resistance, whatever. We've identified them and we're marking them as we trade, as the day goes on. This is going to be critical for a bear market. Why? Well, you can learn more about that as you take the training, but there's a reason why SPY is moving in this really disjointed behavior. There's a reason, okay? And to help you make sense of it, for it to be a little cleaner and clearer, draw the areas of interest on your screen as you trade. Don't just blindly look at the chart with googly eyes, right? And just say, oh no, I don't know where we're going. It looks so confusing. Make sense of it. Ask yourself, where are we going? Ask yourself, what is happening here? Ask yourself, what's coming next, right? Where and what's happening? Why is this action forming? Now, do you want to understand? Do you want to get an idea of the mindset of a trader? Do you want to know exactly what I'm asking myself as I go through a trade, how I'm able to come out of every day and week green, even though I'm still going to take 3 losses out of 30 trades? That's my ratio. I can't get it any better. About 33, 35 trades, I'm going to take about 3, 4 losses. I've got 3 losses this week, just like every other week. Nice green week. It is what it is. But would you like to know what I'm thinking as we go through the day? Watch this video. Day trading SPY options for 100% wins. Work on your mindset. What am I thinking while I'm literally in a trade? Here's part of it. I am thinking to myself, all right, this is an area of interest, right? Buyers were present or sellers were present here, and they may not be present for forever, which is why I don't like the terms supply and demand overall. They're appropriate, but not at every little area. But at this point, sellers were present. Then at this point, buyers stepped in. Now, a lot of you guys were scratching your head. Today is 7/15/2022, Friday, OPEX as well, and you expected a dump. And you couldn't understand why the market just stayed so high. Listen, the short of it is this, all right? The reality is because of where we are in overall market structure, sellers are present above us, but the reality is there are no present buyers. We're in a 20% pullback. And the reality is with inflation and rate hikes and so much uncertainty, nobody's getting engaged at this level. Now, as the weeks go on and we get more information on maybe the Fed's decision and what's going to happen and other geopolitical news events and the bonds cool off a little bit, then we'll get market sentiment to change and participation. But the reality is, if you've been inside the wealth wells and you've been inside of training and you got the levels, you know exactly what this area is right here and why we just pinned ourselves to it. And until that happens, we're not moving. We'll dance and we'll drop. We'll dance and we'll drop. All right. As we go throughout the day, I am charting these areas of interest, just like this. Then I am looking at the candlesticks. And based on what I know of the candlesticks, I'm getting an idea of when, in addition to volume, when I can expect a change. When can I can expect a move? So One confirmation is I already have what was once a ceiling now is the floor. That's support resistance 101. What once was the ceiling, rejection, now is the floor, a base. All right, so I'm in a key area. So initially, right off the bat, if this was the first time I'm looking at this right there, I'm like, okay, I am expecting action here. I'm expecting price action. What type? I'm expecting some type of hold. A hold would make sense. A breakthrough would demonstrate weakness. Either way, I can trade it. All right. So now with that in mind, I start to watch the formation of the candles. Okay, I get wicked out here, support, wicked out here, support, up and down. Uh-oh, what is that? Somebody in the Discord, what type of candlestick, if you've been through training and you've been trained, what type of candlestick is that right there at 10:51? Come on, guys. Stu is on it, boy. Is he? Yes. Doji. What is the highest probability? What's the most likely thing I can expect from a doji? Look at BP. BP says doji on the 3. That's BP's favorite move. Look at that right there. Doji on the 3. Reversal. Yes. And I get it with some nice chippy continuation. Right? But I get it. So the candlesticks coupled with these areas of interest give me a strong edge. Now, I've been asked a lot about different indicators and different things. And let's be clear, right? I'll do a video on what I love, what I don't love, why I don't like some, why I do. Listen, I'm nobody. You can choose to listen to me or not, right? I'm just a heck of a good trader that knows how to show you how to trade, have some tenure and experience in this, and can help you. And quite frankly, the proof is in the pudding. You can see the consistency in the Discord, right? But ultimately, you're going to do what you want to do. So let's talk about one or two, and this touches on candlesticks. Let's talk about one or two views that can either help and or hurt you if you're not familiar. So the first is the traditional candlestick view like this, right? These are traditional candlesticks. They can be colored or not. It doesn't matter either way. But what you're paying attention to is the patterns. And I'm looking flat out. I see a doji. I had a nice strong rejection. I'm holding right here. There's a high probability I'm going to break up to another major level or back to the PLC. I'm good with that. But now some traders like to use the Heikinashis. That's fine too. All right. But I want to point out one difference. I get this question a lot, and let me be on the record. I don't have a problem with them. They're not lagging. It's not something that's going to hurt you necessarily. But primarily, these candlesticks are geared toward recognizing trend, okay? They're geared toward understanding when the trend is in full effect, and that's it. They're not necessarily geared or understanding exactly when the trend will begin to change on reading the specific or exact price action. Can they be beneficial? The answer is yes. Do I have a problem with them? The answer is no. But pay attention to the same square here, the same time frame. Where's the doji at 11:51? It's not there. Now, yes, you do get the reversal. Yes, you do get a run up, and it looks very clean here, very clean. So either ones will work. However, I like to know when I can expect it and get in. Once I see that this thing is holding right here, I'm in the trade. Whereas trend traders may have to get in a little late, and that's okay. That's okay. But in a bear market, you may want to fine tune your entries a little bit. So I'm telling you on record, you can use either one. I got no qualms with either one. I like the old-fashioned candlesticks. They give me the most accurate data. And you can also, in harmony with them, you can use the Heikinashis, folks. I'm not, nobody's tripping on that. And I tell traders all the time, I won't argue with you on any system or setup. You know that. You guys know that. I'm not a prideful person. I'm not going to tell you that it's my way or the highway. What I will say is this. If it's giving you an edge, and it is not, I'm firm on this though, it's not a lagging indicator to make a trading day decision, an intraday decision. If it's giving you an edge, go ahead and use it. All right. So the first tip to understanding how, let's recap. The first tip to understanding how, the 3 ways to read confirmation. First thing we're going to do, identify these retracement areas. You can call them what you want, but they're just areas of interest on your screen where we can clearly see that buyers and sellers are present for the time being. They won't always be there, okay? It'll change. That's what volume is. The first thing I'm looking at, candlesticks. I look at the candlesticks in harmony with these areas. I read the candlesticks. I know I'm good to get in this trade to hold to my next major area or area where I see volume change. All right. Second thing I'm going to be looking at is my levels. It's my levels, period. Now, every morning at 8:50, we do a pre-market prep, and the levels are posted here and throughout the day as they adjust. You can develop your own levels. That's up to you. If you go through training, you'll get the levels as well. But the reality is the levels tell me what I want to hear. Now, these are not, I'm going to state again, these aren't all the levels. To make this chart a little bit cleaner for demonstration purposes, I went ahead and taken some levels off. But the reality is I see a hold down here at 38201. I see some aggressive action. I see another hold down here at 3811, a 381.11. So you know what? If I see a hold anywhere in this same area, I'm going to go ahead and get into a call to the upside, right? In fact, I took one of these trades for continuation and we danced around, had to exit the trade because of the entry and re-enter for profit, right? That happened today. Took a very few trades today because of the chippiness and the behavior, but came out the day green. So one thing I'm looking at, all right, that's the levels. Do I have an area of interest here? Supply, support, resistance, supply, demand, whatever you want to call it. Did I get the corresponding candlestick? Am I at or above a level? Okay, that's 3 confirmations in harmony with your wits that you already have, all right? The third one I'm going to be using is market sentiment. Market sentiment. All right. The question is, where are we going? Well, ultimately, we're going to 385 today. But the reality is, as stated in our pre-market, this area up here is close or is in a 20% pullback zone from all-time high. So I know, as stated in the pre-market prep, we would need some aggressive volume to really push through. And we never got it. Therefore, after you keep seeing 1 test, 2 tests, 3 tests, 4, 5, 6, we keep retesting this area and we don't break it, you can conclude that 2 things are happening. Number 1, you can say to yourself, well, there must be something up here holding us down, and then there must be something down here holding us up. What is that called? It's called volume or the lack of market participation. So obviously we had an overwhelming amount of sellers just sitting up here. I check level 2 data. I look at the tape, bid stacked. People are up here. Every time this thing came up, sell, no strength, right? But then as we come down into these areas here, the sellers up here weren't so overly aggressive where they kept pushing down the bid. It was just a ceiling there, right? And so as stated, it's in the market's best interest. It's in really all of our interests for this thing to stay above bearish territory because it's healthy for the economy. But the reality is understanding market sentiment, where we are in the stream of time, in the year, in the day, gives you an idea of what you can expect. You can't predict every candle. You don't know exactly what's going to happen, in a single or 2 or 3 candle move, but overall, you know where we're going. And that's one of the most important things to trading, folks. Know where you're going. Let's conclude this training with this little tidbit here. No matter who you are, no matter who you've taken classes from or learned from or what YouTube university you went to, I'm going to give you free game now. Whether it's wicks or not, whether it's choppy action or not, there are 5 words that will help you before you enter a trade. Those 5 words are know where you are going. You should never get into a trade with the hope factor, hopium, wondering, wishing. Just take it to your level, reset, review, and re-enter, and you'll be fine. All right? That's going to get you on your way. All right. So we've discussed in this training 3 ways to read confirmation to enter a trade. This training dovetails very nicely with the aforementioned training about the confirmation with my 3-step check system that you need to enter a trade. Here it is here. Watch this video right here to understand what I'm looking for, the break, the follow through, the rejection, etc., to get into a trade. Do yourself a favor, watch the Only 3 Indicators video to drill down the importance of VVP, then come into the Discord, jump in. I'm live every day in the SPY voice on Mondays and Fridays. Other days, I spend all my time right here in the private channels for the Killer Whales coaching, proprietary levels, swing trades. I trade live from 8:50 to about 12 or 1 p.m. And then I'm in the chat still with trade call outs there. All right. I'll open this thing up for any Q&A inside of the SPY only options room right now. And I will stop the video here. If you're watching this for the first time, or if you're watching this on YouTube, click the link down below, come into the Discord so you can learn how to trade like a Wall Street whale.